welcome back. You're watching Mid-Cap Radar. For the market still holding just shy of that 6,800 mark, but the mid-cap index is up about 1% and several mid-cap stocks are flying around. We've been speaking about Liberty Shoes for a bit now. Actually, that company has delivered a very good set of numbers. In fact, it looks like they've made a habit of delivering good numbers. So this time around, net profit is up 345%. Their net income is up 34% to over 140 crores, and margins have come in just shy of that 9% mark. So Adesh Gupta, the CEO of Liberty Shoes, now joins in on the line from Delhi. Hi Adesh, congratulations on what looks like another very good quarter. So now that you've managed your FY14 top line guidance at 500 crores, what will FY15 look like?
Well, I think we are quite excited, for this year. This has been a very milestone year for us, where we have reached the level of 500 crores. And I think this has set an inertia in the whole company and, all the stakeholders as to look for sustainable growth. And we are looking, let's say, for the next financial year on the drawing board stage, which is between 20 to 25%. That is what at least we would look at. We could be even higher, but at least this is what we would like to focus.
All right, Mr. Gupta, that's quite a tall ask on the top of such good numbers. Another 25% growth. I'm sure your shareholders will be quite excited about that. But getting back to your margins, for this particular quarter, 8.8% approximately is what it clocked. What caused this margin expansion of around 130 basis points on a year-on-year basis, and can it get better?
Well, I think there are two aspects to it. One is that going forward, we expect the input cost will come down because there is let's say, rupee appreciation, which means the imported materials which we use probably will be cheaper. That is one. And secondly, when the top line increases to a certain degree, thereafter, the gross margin contribution towards the net profitability also increases much substantially. And I think these two put together will give us a better margin going forward in the next financial year.
Adesh, the last time we spoke to you, you said it was a change in merchandise assortment which was actually helping you guys in terms of your financials. Is that going to be enough to sail you through the next year as well?
Let me put it this way. We have changed our business model. We have done the innovation for the first time in any footwear industry, particularly fashion industry. We have changed our business model from push to pull, and I think that is the fundamental on which the whole company is riding. And I think we're riding a wave which will continue in the next financial years, because the change in merchandise assortment and all other parameters which the company is doing is a continuous process. But the paradigm change which the company has made from push to pull is actually the reason we see much more footfall and conversion of footfall. So we have seen in our stores there is a 20 to 25% new customers being added, which is a good sign going forward that the brand equity of the company is increasing in the minds of the consumer, and the lifestyle change and the merchandise assortment which is adding to the whole, let's say, feel of the company and the products will give a very good value to shareholders.
So what does this take your market share to now, and are there any price hikes that you could be looking at?
It doesn't appear to me that we will have a very huge price increase, but maybe smaller dose of increase maybe in certain product categories depending on the export or institutions or domestic. It all depends where the costs are going to increase. So that particular portion will see some surge in the price, but otherwise we don't see a huge change in the price going forward.
Mr. Gupta, as we speak, your share is again at the high point of the day. So clearly, they're taking note of the comments that you're making, and in fact, that 20 to 25%, I think that's what's getting the street excited, along with your margins. Finally, Mr. Gupta, I just want to ask you with regard to your capex plans for this year, and if you have any, can you give us a ballpark figure, and also how will you look to fund it?
As far as the capacity is concerned, at the back end, we really do not see any need for any capex expansion. But however, the whole focus now has shifted from, manufacturing to marketing, and the whole expansion which will happen going forward will be more in the retail stores. And we are hoping to, add a lot of new stores going forward in the next year, which will give us a, targeted growth, because that is where, the growth is going to come from. So that is where probably the capex will go, which will be mostly like, supply chain or working capital. It's not necessarily, in the plant and machinery.
All right, Adesh, thanks very much for joining in and touching base with us. That's the management of Liberty Shoes there, detailing their numbers, saying that from this 500 crore top line that they've seen in FY14, they could see a further bump up of between 20 to 25% in FY15. So here's where we need to take a break. Before that, here's our closing bell money control question of the day. Jaitley says, raise the income tax exemption limit to 5 lakh rupees. Will the BJP do it if they are voted to power? Log on to moneycontrol.com and post your opinion. We will read out some of the most interesting responses in a bit at 3:30. Time for a break. Up next, we will touch base with another corporate. Jitendra Mamtora, chairman of Transformer and Rectifiers, joins us from the sidelines of the Edelweiss Intraday conference.